Greetings, class, and welcome back. This is Chapter 2 in Managerial Accounting, Job Order Costing, an overview. We're going to talk about what job order costing is in this chapter and really how we calculate specific items. Like here, we're going to talk about computing predetermined overhead rates, applying overhead cost to jobs, computing total cost and unit product cost, and then the total cost and unit product cost of a job using multiple predetermined rates. So job order costing is really a way of assigning product costs in a company where you're either manufacturing or providing different kinds of services or different kinds of products, and you can track them individually. So examples of job order costing they have here with Boeing. They have construction projects managed by Bechtel, and so on. When I was telling everybody about my experiences in the epoxy factory, that was also job order costing because we tracked our labor hours that we put into specific jobs. Now, if you're going into the workforce today in a service job, it's very likely that you'll have something similar to that. I know in the Medicare Audit Division, when we reported our time, we had to assign it to specific assignments that we were working on. So the time was billed, if you will. The hospital didn't pay it, but the government basically got a record of it. So we identified where we were spending our time. Now, when we're talking about jobs, we're talking about a product or a line of products. And so we're not necessarily looking at a one-off kind of a job, although it could be that. But most of the time when we're talking about this, we're talking what is required to get direct materials, direct labor, and manufacturing overhead costs assigned to a specific product or product line that we're working on. So when we measure direct materials costs, we're going to have an easily traceable amount of direct materials that we'll put into this product. Like I said, when I worked at the manufacturing plant for epoxy, we could tell exactly what was going into each particular product. It was a recipe, if you will, but it identified exactly how much went in for each product. Now, as those products were manufactured, as products were put in, the materials were put in, the materials cost was tracked by the people in the production department. So as you are manufacturing, as you're adding materials, you're keeping something like this, which, by the way, this is an individual per unit cost. They're looking at what are we going to use to make a unit? Well, we're going to use 2 of these housings and 4 of these connectors. Total cost is $660. But what you're really going to track things on, if you're in the manufacturing plant, you may not have the cost, but you're going to have the direct materials that you're using. You're going to identify the direct materials. You're going to put those in. You're going to have the direct labor. You're going to put that in. And by the way, the direct labor will come from, or usually does come from, some kind of time record that employees keep identifying which particular job they're working on. Then which will look like this. This is an employee time ticket. And by the way, you notice that they have different jobs on this time ticket. This is very similar to something that I used to fill out where I identified the product or job number here and then kept track of how many hours I worked on it. And so those forms, these time tickets, are used to assign direct labor hours. So we want to compute predetermined overhead rates. And by the way, going into a year, we're going to calculate it before the year starts. So it may not be exactly correct, but we're going to estimate it. And we're going to use some kind of an allocation basis that will allow us to assign costs to a particular job or product. The formula for it will look like this. We're going to calculate the estimated total manufacturing overhead costs and divide it by whatever the estimated total amount of the allocation base is. And that will give us the predetermined overhead rate. So we'll have an overhead rate per, if this bottom number is direct labor hours, it would be an overhead rate per direct labor hour. If this bottom number is machine hours, it'll be per machine hour. It just depends on how they want to compute it. And then we're going to use this cost formula to calculate the total overhead costs. We start with Y, which is the estimated total manufacturing overhead cost. Letter A is the estimated fixed manufacturing overhead cost. Letter B is a unit rate based on this allocation basis that we choose. So in this case, it might be an amount per direct labor hour. And then as we go on down here, we have the actual estimate, well, not the actual, the estimated total amount of the allocation base. So in X, we're going to say, okay, well, we expect we're going to use, if we're using direct labor hours, we expect we're going to use 10,000 direct labor hours to manufacture this job. And so that's how they calculate the total. All right. When we apply manufacturing overhead, we're going to use the same allocation base that we used to calculate it, and we're going to apply it to a job based on that statistic or number of direct labor hours that was used on that job, or perhaps machine hours, something of that nature. Here's a calculated amount for actually walking through that cost formula. You have a company that has $640,000 in total fixed manufacturing overhead costs and $4 of variable manufacturing overhead costs per direct labor hour. Given those assumptions, compute the cost, use the cost formula to estimate total manufacturing cost for the year. So we're going to work that out. We're going to say $4 times 40,000 direct labor hours, because that's what we estimate we're going to use. That plus 640,000 gives us 800,000, which we expect to be our total manufacturing overhead. And then we take that 800,000 divided by the same direct labor hours that we were looking at to calculate the cost, and that'll give us an application rate of $20 per direct labor hour. And then when we identify how many direct labor hours are used on a specific job, then we can calculate what that manufacturing overhead cost is. We need a predetermined rate because we want to estimate in advance. We want to be able to identify what we think we will have and then work from there. We can't always, the reason we don't use actual is because the actual may change and fluctuate. And really, when you're doing a predetermined rate, you're spreading it out over the whole year. There might be changes and fluctuations that occur cyclically, and so you don't want to involve those in this computation if you can avoid it. So anyway, we do a predetermined rate. Here you see the $20 per direct labor hour. They have 27 manufacturing. They have 27 direct labor hours that it took to manufacture this product. So their manufacturing overhead is 540, and that's added in to get the direct total product cost, and then that's divided by the number of units produced to get the per unit cost. So that's how it's calculated. Job order costing is also used in the service industry, and I mentioned this. Things like healthcare and at Blue Cross, they were using it all the time. To allocate costs to different product lines and insurance groups. And basically, job order costing helps determine what the allocation base should be. So, for example, when I worked on hospital audits, they would allocate laundry costs to the service departments, which were things like people who were in the inpatient area, people who were in operating room, people who were in a recovery room. Maybe there was somebody in outpatient therapy center or something of that nature. They would allocate these costs to these different departments. And what you wanted to do or wanted to be able to do is to have a statistic that you could use to allocate those with that made sense. So, for example, with laundry department allocation, they always use pounds of laundry cleaned in order to identify what cost, the laundry cost, should go to that particular department. And so that's how you match up basically this. You're going to match up the basis with whatever cost you're looking at and what the department does. So when you choose an allocation base, it has to connect with the product and it has to connect with what you're allocating actually. Now, does it make sense that you're going to use this? And for manufacturing, most of the time, it's going to be either direct labor hours or machine hours because those are going to be big drivers of cost when we're looking at manufacturing something. So if we were to use machine hours or direct labor hours, that would probably connect well with what we're thinking about in terms of job order costing in a manufacturing environment. We may even use multiple predetermined rates. So if we do, that means that there may be a need for different rates at different times. So in this example we have here, we have two departments and each of them have different statistics related to machine hours, direct labor hours, direct materials, and direct labor costs. And when we look at these, we're going to calculate the total manufacturing overhead costs for each and then figure out how we're going to allocate it. So remember this formula that we talked about a minute ago. Here on this one, we identify the manufacturing overhead costs for the milling department. So we identify the fixed, the rate per man hour, and then how many man hours there were. And so we're going to add all those together to get that, calculate that estimated manufacturing overhead cost. The assembly department is similar. Here, instead of machine hours, we're looking at direct labor hours. So we're figuring, okay, in the assembly department, it's going to be more labor intensive than it is in the milling department. In the milling department, you're probably running these products through a milling machine. Okay, then we have the calculation of the overhead rate. So we take this 510 that we calculated here and divide it by the machine hours that we have here as well to get an amount per machine hour. We could do the same thing over here in the assembly department. And once we have these, once we calculate the per hour rate, we can apply it to whatever products we're producing. So in this case, we're going to calculate the amount of overhead applied to both of these departments to this one job. The job is moving from one department to the next. So in the milling department, we identify $8.50 per man hour times 90 man hours, $765. In the assembly department, it's going to be a little different. We're going to say $10 per direct labor hours times that's $10 per direct labor hour times 20 direct labor hours used to manufacture this. So you're going to come up with the direct labor. Well, you're going to come up with manufacturing overhead based on direct labor hours. So then we calculate the total job cost, and we're going to use those costs that we had here. So the bottom line is that we calculate the total cost, and this is product cost. So we have direct materials, direct labor, manufacturing overhead, and this is applied overhead, which means we calculated the rate, but now we've manufactured the products, we're applying the overhead to them to see how much in total product cost we have, which in this case is $24.85. And then they show here that we're going to go out and sell this product, but we're going to mark it up over our costs that we have to make it, because there are some other things that we need to consider. And notice in here, we've calculated a product cost, but we have not calculated anything for period cost. So in order to cover those period costs and we hope make a profit, we're going to multiply the product cost times this markup percentage, and then we're going to add that to the cost in order to get whatever selling price we're going to use. Okay, so those are some of the big items when we're looking at job order costing. Now, we can also use an activity-based approach. When we're talking about activity-based approaches, what we're actually doing is we're looking at the activities in the department and calculating using different rates for the different activities. So we may have multiple rates or predetermined overhead rates for a department. So we can have more than one based on the activities that go into a particular product. When we look at the external reporting and job order costing, when we use these predetermined overhead rates, it's almost certain that we're going to have a different actual overhead cost compared to what we predetermined and projected and applied. We can have, if we apply too much overhead to the cost of the product, we'll have over-applied overhead. If we don't have enough cost assigned to the product, we'll have under-applied overhead. Costs. We're going to have under-applied overhead, like I said a minute ago. But almost certainly it will differ. It'll vary from what we calculated as a projection to what we actually have. If we have over-applied overhead, our profit margin and contribution margin on the product will be too small. If we have under-applied overhead, well, then our contribution margin and the profit of the product will be too large or will be overstated. When we talk about job cost sheets, sometimes they are going to collect them into different categories like this, and you may actually see something that's sort of like a subsidiary ledger where they keep track of all these jobs independently and where they track their costs. Also, we're working with manufacturing. We're going to have to look at the inventory accounts that include what we have in finished goods, work in process, and the goods that have been sold, which is cost of goods sold. We'll also have another inventory account called raw materials, which we're going to use for the direct materials that we put into the product. So, and I mentioned direct costing at Blue Cross, or job order costing at Blue Cross. There are several companies that do this, and many that manage these costs similar to a manufacturing company, even though they're not manufacturing anything. Anyway, that's chapter 2 for now, and I look forward to seeing everybody back in class.